They say all the world's a stage, but in Hollywood, it seems all the stages are constantly up for sale. 1 minute you're watching a movie. The next, the studio that made it is, well, the star of its own blockbuster merger drama. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're pulling back the curtain on Warner Bros. Discovery, ticker WBD. This is based on our research from September 12, 2025, 07.18 a.m. ET. We'll be diving into, the macro environment, the fundamental story, sentiment, technicals, and its strategic outlook, basically analyzing WBD's latest script. So, okay, with Hollywood's curtain still drawing on this whole acquisition drama, let's cut through the suspense a bit. What's the broader market's opening scene looking like this morning? We're waking up to a bit of a mixed picture, maybe a headache. Futures for the S&P and Dow are pointing slightly lower. Wow. While the tech-heavy NASDAQ, it's holding flat. It feels like the market is just, collectively holding its breath, waiting for the next plot twist, maybe.
Yeah, it does feel that way. And what's truly insightful here is how the underlying economic mood might actually play into WBD's hand. Economists, well, they seem to be shelving those recession fears for now, mostly thanks to resilient spending from high-income households.
A premium segment.
Exactly. And that's significant because WBD's premium stuff like HBO Max, it really benefits from that specific segment. It's almost like a microeconomy shield against broader market anxieties. But, tariffs could still be a lingering threat, possibly nudging inflation higher. And we are keeping an eye on today's upcoming consumer sentiment and inflation expectation numbers. That'll give us a better read on the average shopper's mood.
Okay, right. So with that backdrop, WBD itself is putting on quite the show. A potential acquisition and a split up. This is where it gets really interesting, I think. WBD stock, well, it put on a show yesterday. Surged on reports, Paramount Skydance is prepping a bid. This isn't just a business deal. It could combine HBO Max and Paramount Plus into some kind of streaming titan. But then, the plot twist. CEO David Zaslav also mentioned he expects the company to split into two separate entities in 2026. So, how do these massive, maybe conflicting strategic moves even make sense together for shareholders?
That's the million-dollar question, isn't it? Is this a coherent strategy or more like a corporate identity crisis? Looking at Wall Street, out of 24 analysts, 0 are calling it a flop with a sell rating, which is interesting. Instead, 46% rated a hold, while a combined 54% give it a buy or strong buy. That sentiment's been remarkably stable, despite all the complexity.
Stable, even with all this news.
Yeah. And our fair value analysis, based on free cash flow, suggests the stock could be worth around $20.94. So that implies significant upside even after yesterday's big rally. The central conflict here really is this surge sustainable? Or is it just a speculative sugar rush fueled by M&A rumors? It seems analysts are betting on strategic maneuvers, whether that means a sale or a split.
Okay, that's a strong fundamental case being made. But, Wall Street sentiment can swing fast, like a movie plot, right? So what's the feeling out there? Is the audience giving WBD a standing ovation, or are there murmurs of doubt from the trading floor?
Well, if we connect this to the bigger picture, the options market is incredibly bullish, really telling. The put-to-call ratio is just 0.27. That means for every bearish bet, every put option, there are nearly 4 bullish ones, the call options. That's a clear sign of optimism.
4-to-1, wow.
Yeah. The crowd has clearly placed its bets on the show, continuing, you could say. There's a heavy concentration of those call options right at the $15.50 strike price. Short interest. It's moderate, 4.26%. So yeah, some skeptics are present, but they aren't exactly overwhelming the bulls.
All right, let's look at the charts then, and we'll unpack any jargon as we go. What's the technical performance telling us about WBD's current run?
Okay, technically speaking, both the short-term and long-term trends are decidedly upward. Yesterday's surge, it was like hitting the afterburner.
Afterburners, I like that.
And the price jump, importantly, was backed by a colossal wave of volume, just huge. That indicates strong buyer conviction, real money flowing in. Momentum shows undeniable acceleration, but, and here's a crucial warning sign, a key momentum gauge is deep in overbought territory.
Overbought, so too far, too fast.
Exactly. It suggests it might be due for a cool down, maybe some consolidation. And volatility, it exploded, shattered its expected price channel. Think of it like the stock just breaking out of its usual predictable lane confirms a massive breakout, definitely. But such extreme moves, they often lead to consolidation. The price kind of takes a breather, trades sideways for a bit before deciding on the next big move.
Right, takes a breather. So after reviewing all this, the fundamentals, sentiment, the charts, what's our final take, our verdict on WBD's performance?
Our verdict is a cautiously bullish outlook. The main risks, well, the acquisition rumor could fizzle out, obviously. The technicals are short-term overextended, as we just discussed. And there aren't really strong, broader market tailwinds right now. However, that M&A news is a powerful catalyst. It's backed by that strong volume and the really optimistic options sentiment. And fundamentally, the company still appears undervalued, which makes yesterday's jump seem like more than just a flash in the pan.
Okay, cautiously bullish. So what are the key levels we should be watching?
Right, the key battleground, the critical plot point, if you like, is the $15.50 level. We saw that in the options data, too. If the bulls can defend that level, the target becomes yesterday's high of $17.24.
Yeah.
If the bears take control, though, the next defense is down at $14 support. Our invalidation level, that's where the whole bullish thesis kind of breaks down, is a close below $14.
And just to clarify, that invalidation level for you listening, that's basically the point where we'd say, okay, the bullish argument doesn't hold up anymore.
Precisely. A close below $14 was signal the bears have really taken control, and we need to reevaluate the whole story.
Got it. So for WBD, it seems the premiere was a hit, but with a potential split and a merger on the table. It really begs the question, is Hollywood's future about creating captivating content anymore, or is it just about crafting an attractive asset for an even bigger show down the line? Something to think about. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.